Okay, welcome back YouTube. Today's topic is going to be some of the key takeaways I've had from the previous 2 weeks of June. So as you all know, we've seen a very good upleg in the last 2 weeks in June. Ever since 29th May, we saw quite a long upleg, I think around 7 to 8 days, maybe more than that, maybe 10 days. And we've made quite a bit of money. So the statistics are we had a 10% impact on portfolio. And this was done by taking, I think, 8 to 9 positions, and in fact it was only probably 2 to 3 positions that made a genuine impact on portfolio. So the idea is to understand what were some of the key takeaways I've had from these past 2 weeks, what have I realized really works and what doesn't work, and how we can utilize that to make sure we make more impact on portfolio and more money in the next few weeks. So just looking at the market right now, the market opens gap down 2% and we've seen a quick recovery. This is good action. What I want is now the market to consolidate over here for a couple more days, and then we should be on for another up leg. And maybe the next up leg can come till all-time high levels and surpass that as well. We don't know, but let's see what happens. Okay, so getting on to the June rally now. Now the June rally was a rally which was very, very interesting. It was not an easy rally for a lot of people because sector identification in this rally was very important. So that this was a complete sectoral rally, right? So my first instance that I've realized, so my first key takeaway from the June rally was that odds of success of a breakout increased drastically when the 50-day moving average was above the 200-day moving average. And let me show this to you through an example. So let's take the example of Cochin Shipyard. Now I've spoken about this previously as well, but Cochin Shipyard did amazingly well, right? The trade for me was around a 20% mover, right? So 20% movement in Cochin Shipyard, and you've capitalized on all of that, which is really nice. However, we have to understand that Cochin Shipyard had multiple entry points. So the first entry point for Cochin Shipyard was on this day, the 27th of May. You had an entry around these levels, right? And then you could also add on your entry the next day on 28th of May. However, the stock failed its breakout, right? It gave another pullback and then decided to break out. But if we look at what happened, we can clearly see that the 200-day moving average is still not in its golden cross. The 50-day moving average is below the 200-day moving average, even though the stock price is above it and the sectoral strength was amazing at this point, right? So it does not matter. Now we see the 50-day touching the 200-day. Lo and behold, 50-day above 200-day, and the breakout comes. So this was my biggest takeaway from this June rally, that stocks which were in a golden cross have worked much, much better than stocks which were not in a golden cross. Even if we look at R Power was in a golden cross ever since its episodic pivot, right? And since then, the stock has given a move of around 100%. So that's just showing how important the golden cross actually is and how we have to utilize the golden cross to then make bigger positions in the future. Another example that I would like to show you is GRSE. So GRSE was having a lot of news flow and a lot of things were being discussed until this point as well. In fact, I also traded the stock on this day, but I made no money, no real money. Because again, not in a golden cross, very choppy price action till here. However, as the days unfolded, it became much, much better. So we can see over here clearly that the stock has now given its up move, right? And it's going up and it's consolidated. Now, right before the first breakout came in GRSE, which was tradable, we saw that the golden cross took place. So you can see what I'm saying, right? And after the golden cross, it's just up and up and up. So that's the entire idea. Always try and bet on these golden cross trades. Apollo Microsystems was consistently in a golden cross, and that's why it gave returns of 50% from its breakout. But if we look at Premier Explosives, this was not in a golden cross. And look at the breakout. 13% but a complete squat. So 4% breakout, right? Now it's entering its golden cross. So maybe now we come up here, consolidate for a couple days, right, with the market, and then we give another move. And maybe this can now give a beautiful move just like Cochin Shipyard did, because it's now in a golden cross. So that was my biggest takeaway. Now what we can see and what you can say is that Data Patterns was not in a golden cross when I first took my position over here. right? On this day, you're not in a golden cross. But if we see what were the odds, what happened in the stock, sure, you went up 10%, right? And then the stock falls again. The idea is that going up 10% is good. Like any stock can go up 10%, but has the stock shown this kind of move, this 40% move, right? Or this R power move from here, another 45% move? That's not happened. So stocks can go up, but it's about increasing the odds of your success, and that can only be done when there is a golden cross in play. And what is a golden cross? It's simply when the 50-day moving average is greater than the 200-day moving average. So now let's move to the second key takeaway that I had, and this I realized by making the trade in Leela Hotels. The Leela, let's call it that, because I cannot pronounce that other name. So in the Leela, we can see very clearly that there was a breakout on this day, right? So if we go back, let's go back here and let's hide these drawings. Okay, so it is picture perfect IPO base. You have your first day, the second day is inside, the third day you're ready for a breakout over here at this levels. You're ready for the breakout, right? But what happens is that the stock does make that, breaks out and sits back down. You can still hold it, but at that time I was fully focused on defense, so I got out. Then it makes another inside day, and now from here it can go up as well, still consolidates, and then it breaks down. So what is the biggest learning from the Leela? The biggest learning is that IPOs only work together, and you can think of IPOs as a sector. So if you look at Bellrise failed as well, right? In fact, we go to any IPO in that period of time. Skoda Tubes, again, now this is a 5% circuit, so I will not speak about this, I think. But yeah, it's a small stock. So sure, you can say Skoda Tubes work, but there was no entry point for you anyway. So the idea is that when IPOs work, they work together. An example, the November-December rally, right? Waaree Energies, this happened in October, but this was the start. So Waaree Energies, amazing. Akums Drugs, amazing IPO action. NTPC Green, this was a November-December rally. So NTPC Green, beautiful. EIEL, same dates, beautiful rally. There were two more. Niva Bupa, right? Beautiful rally. Black Buck, another beautiful rally of the IPOs. So what am I saying? The idea is that you have to understand that young IPOs, right? These 2-3 days consolidation, then the blast movement, these only happen together. And when they happen, 4 to 5 will happen together. Think of young IPOs as a sector. They always will work together, otherwise they don't work. And they need to have liquidity, and they need to have that cash flow coming in. Liquidity is not just, you can't just say that Bellrise, for example, is a liquid stock because it has 100 crore of volume, right? Liquidity has to also be looked at the point of view from cash flow. Is the cash coming into this space? That was not true. At this time, the cash was all coming into this space. GRSE, Cochin Shipyard, Premier Explosives, Mazdok was also good. But Mazdok, the issue was that there was a clear wedge over here. You can see a clear wedge in Mazdok, right? And it was almost as if the institutions were like aware that something was not going to be good, because this wedging action was never good. You want to go up and then you want to consolidate for a couple of days and then give that breakout. But that did not happen. So the third key takeaway after young IPOs and 50-day over 200-day is that environment is the most important, then the sector, and then the setup. It is very clear right now that the market environment is weak, right? So irrespective of what the sector is or what the setup is, I'm not going to buy it. AstraZeneca is from a good sector right now. Pharma is doing well. But where is the push? There is no breakout push. You break out from here, you're up 3% in 2-3 days, right? And that is because the environment is not good. Now, Wockhardt Pharma is something that can set up very well in the next 4-5 days. But the idea is that the environment matters the most, and then the sector, and then the setup, right? And that can be seen in the past 2-3 days when the markets have fallen. A lot of people would have lost quite a bit of their breakout trading money over here. The next thing that I realized is that stock characteristic is the most important thing. For example, let me take you through my trades. What I mean by stock characteristic, GRSE, this stock's characteristic is what? That it clearly was riding its 5-day moving average. If I hide all my drawings, clearly riding the 5-day moving average on the up run, right? We can go to Cochin Shipyard. This is riding the 10-day moving average on its up run. We can go to Sharda Crop, clearly riding the 5-day moving average on its up run. We go to R Power, clearly riding the 5-day moving average on its uprun. So the idea is that you make sure the stock is behaving according to its characteristics, and the moment it does not, you exit and take your gains and go. The point is that I want to take my gains very quick in a market like this, because we're still not in a bull market, right? We're not in a bull market till the small cap index breaks these levels of 19,600 whatever. So the idea is that you want to take your gains quick, because in a bull market, riding the MA is beautiful. You can make a lot of money. But in markets like these where we're not still sure in which phase we are, like we can very easily reverse from here all the way, or we can very easily make a new high and start a new bull market. But riding the MAs is important, and also selling when the characteristic is broken is very important. So GRSE, if someone thought that it's riding its 10-day MA, was wrong, because they were riding its 5-day MA, not the 10-day. So you would have probably missed out on 5-6% gains, and I don't want to lose that in such a market. So the entire idea is that understand the characteristic of the stock. What MA does it ride? For entry and exit both, not just for your entry or just for your exit. Now another thing is that you want to also see that the stock is linear when it's riding this MA. So GRSE is a perfect example of the stock being linear. You go up, you're pausing. You go up, you're pausing. You go up, you're pausing. You go up, and then you break down. R Power, an amazing example of being linear. This is the best example. Up, consolidate, up, right? So these are the kind of trades that you want to be a part of. You don't want to be a part of Premier Explosives, for example. This is not amazing yet. It can get, but right now, no. It's up, but it's very choppy. It's quite a lot of gaps, a lot of, choppy action, etc. So you don't want this. It's a volatile stock. Apollo Microsystems. Right? This was a trade that I did not take because I didn't see a pivot, but for anyone who took it, it's a good job, because at the end of the day, if you're profitable, you've done a good thing in the markets. But anyway, this was just a constant up move and then a breakdown. So you want to be in trades like R Power, GRSE, etc. The last thing that I realized in this entire June rally is that you have to have an exit plan. Without an exit plan, you're going to give away multiple gains. The three biggest gainers, GRSE, Cochin Shipyard, and R Power. Let's see if you didn't have an exit plan, what would happen. From your highs, you've given back 17% in GRSE. From the highs, you've given back 15% in Cochin Shipyard. And from the highs, you've given back 12% in R Power. So multiple double-digit gains in 3 stocks have been given back just by not having an exit plan. The exit plan is most important. Entry is easier than exit. You always have to have a smarter exit plan than an entry plan. That's the end of this video. I hope you've enjoyed and learned a lot from the June rally and what I've observed. And make sure that you're making notes of these things, because they're quite interesting and they're going to be seen again and again in the market. As for the market, I feel like a couple days of consolidation and we should be back on for another up leg. But the market always decides what it wants to do on its own, and I don't comment on that. So until next time, I'll see you all.